Welcome back to my YouTube channel. I've got a great guest today, Neil Timmins. Neil was a single family investor that transitioned into commercial real estate, and he says he's asset class agnostic. So he has office, he has multifamily, he has a little bit of every asset class. So it's pretty interesting how he transitioned from the single family to the commercial. So I think you can get a lot of value from Neil today. So make sure you check out the video and give us a like while you're there. Now, if you're new to this channel, my name is Joe Killinger. I've been a real estate entrepreneur for over 20 years. And I use this channel to bring on people like Neil to really pick their brain to see what's worked for them, what has not worked for them. And we just talk about how he has transitioned. So it really can be a lot of great information for you. So make sure you go to the video, give us a like, and if you haven't done so, make sure you subscribe. All right, Neil. So, I mean, the transition you went through from being buying single family flips into commercial, investing in commercial real estate, how did you make that transition? I think, it's a really solid topic that a lot of our viewers are, they've been doing the BRR stuff and they think, you know what, maybe I want to move into doing commercial. And since you've got that experience, I think you bring a lot of value to our viewers. So could you tell us a path that you went through?
Yeah, well, I mean, the first one was make a decision for me. And for really what I mean by that was having single family homes as a rental was really challenging. I mean, to run it really at scale, you got to be like Walmart, meaning you got to be big, you got to be super efficient, and you got to deal with Walmart customers.
Right.
I mean, that's the tenant clientele at scale, at mass. And so that became really tough to deal with. I even have had a third-party manager. So we've been through 3 third-party managers on the single family side in about, an 18-month stretch. And, the first one wasn't great. They spent my money like it was going on a style.
Yeah.
I mean, in just one thing, repair, you're going, we still fix and flip. So I'm really attuned to what things cost. So you're going, I wouldn't pay whatever. I wouldn't pay $300 for a toilet to save my life. Like that wouldn't happen.
Yeah.
And so we replaced them, got another one, and they were worse. I mean, they were 10 times worse than the first one. So, we got a third one, and we've had everything happen. I had a water line go out in the middle of a major street that became my responsibility as it ran to the house. It was a $14,000 repair. I mean, it doesn't take on a house that rents for $850 a month. I mean,
it takes a while.
It takes like forever, right? I mean, so a whole long time. So I was at a spot where I was going, you know what, if we can find an avenue to make things easier, to scale up, to move into bigger assets where you're dealing with, on the business side, you're dealing with professionals, people who want to lease space, people who operate businesses, similar to us. We operate a business, we got to make a profit. If I have to lease an office space or lease an industrial space or lease a retail space, they all want to do the same thing. And so eventually just made my way into there to go, all right, well, let's give it a go. Ended up buying a piece. My first one was an eightplex, seller direct, bought it directly from them, distressed seller. Went in, remodeled the property as it needed, did a burst strategy on the commercial side here, and then put professional management in place. And the management on a multiplex is nothing like a management on a single family home.
Right.
You got built-in line items, there's built-in expenses for it. And it just became so much easier. And so that then morphed me into the next one, an industrial building, 18,000 square foot, triple net deal, and bought it. And the amazing part is on that, never hear from these people. It's a triple net deal. Yeah.
When you bought it, Neil, was it already leased out or did you have to lease it out?
Yeah, it was already leased out. Okay. Yeah. Yep. Came with a lease in place, tenant with a long-term lease. And so we self-manage that. And that really means like collect checks and do nothing else because it's a triple net thing. They handle the expenses. They mow, they snow, they handle it all.
Yeah.
And so we just don't do anything, not very much. And so that led me down a path to collectively as a team, us down a path to go, all right, well, how do we do more? And so we just kind of chip away. And, there's a learning curve that goes into what do you need to know there? And it's really not that steep. It's really not that, it's daunting at first. And then you get into it, you're like, all right, well, that was way easier than I thought it would be. Yeah. And it really is, especially coming from a world where if anybody comes from a single family experience where they my world is agent to investor, single family, fix and flip, wholesale, novate, single family home rental properties, and then morphed into commercial. And that is our focus today.
Okay. And the asset class, are you focused on strictly industrial, or what are you focused on?
I'm asset class agnostic. So I'm in Des Moines, Iowa. I'm in a tertiary market. And so we make, I always say we make, the goal is to make pennies multiply. And so, coming from a single family world, if I would tell you, there's a good deal on a house or a condo or a townhome or a piece of ground. I mean, if a good deal is a good deal, Joe, you'd probably buy it, wouldn't you?
Sure, absolutely.
And so, when it comes to the commercial side, it's the same thing.
Yeah.
I was going, well, I'm in my backyard. My comfort level is my backyard. I like building the relationships with people, both seller direct and on the brokerage side, and leveraging those broker relationships versus focusing on one asset class and trying to do it in 7 submarkets across the country. I do that on occasion. I buy with partners in various markets, but they've got to be in that market. They have to know that market. I don't lead it. I buy in my backyard. So I buy, we've done everything. Office. So in our portfolio, office, retail, medical office, industrial. I like industrial a lot. Then we've got some multifamily, smaller stuff.
Okay. Now, you brought up a common theme that I hear across the country is finding the right property management company, because it sounds like you went through some bad ones, and you've got somebody good in place now, I take it. So, or are you guys self-managing?
Yeah, good question. So on the single family side, single family management and commercial property management, our experience has been, it's night and day. Yeah. It's just so completely different. Different. I think, the core of the difference is the clientele.
Yeah.
Yeah. And so the type of people just looks very different. And so on the commercial side, we have a different property management company who we've been with from the get-go. They're fantastic. It's just been great. The underlying tenants, although we've got a whole bunch of different tenants and different businesses, just the way they manage them from a professional standpoint, often people go to school for property management on the commercial side. It's just a totally different experience. And so it's been wonderful.
Oh, that's good. Yeah. It's you'll find that getting into the triple net stuff, or, the STNLs, that's what we moved into. We actually ended up selling a lot of our multifamily, and we're based, our assets were in Dallas, and we got these offers and we moved into STNL. And just because we couldn't get our hands on more multifamily, now the manager's like, wait a second, this is kind of easy. I don't know what to do.
Right.
So buy more STNL is what we're doing. We're looking for more of it around the country. So
you hit on I think one thing that just doesn't get spoken enough about in this industry. Everybody wants to chase the dollars and where you get the highest return. And for us, it's about getting the highest return and with the least amount of brain damage, and by leveraging our time. You just touched on that. Is that there are certain aspects of where you can place your money where you can get terrific returns, and then you're leveraging your time. So if you want to account for your time, I think on the single family homes, if we started accounting for our time, dogs. I mean, it's just not an avenue versus leveraging up, getting a nice solid commercial property. Your time goes so much further.
Yeah, I agree. If like what we're doing, I mean, our main business is commercial brokerage here in Los Angeles.
Yeah.
And, when we got rid of the multifamily, we just sold off our property management division. And, we can self-manage these properties for, it takes a couple hours a month is all. Yeah. And make sure the money comes in. And then, like, I was just in Texas this last week, and I drove by them, and they're clean as ever. And, I like to go around and just check and see, make sure everything's being picked up in the area. But customers were in work. I mean, it was a great way. It's a great way to make a living, is just sitting on those and not having to worry about them. Compared to when I was in multifamily, I was going out to the properties every day, and, we were self-managing. So I was out to properties almost every day and dealing with tenants. And, that's hard to do when you're doing the brokerage if you have another job. And so I'm all about the STNLs or triple net deals.
You got to leverage your time, and it's really, I think, what all of us ultimately get into this business for is a sense of freedom. It's both financial freedom and it's time freedom, and to get to do what you want when you want to be able to do it. And there's certain aspects of this industry, certain investments of this industry that leverage itself to actually give you that.
Yeah. Now, Neil, when you guys are buying, do you have a certain level of return that you expect on each asset class? Is it different? Or do you just have, this is the return we need to make it worth our time, no matter what the asset class?
Yeah, no, that's a great question. No, we've got a return that we need to make it worth our time, no matter the
Okay.
asset class. Yeah.
Okay.
What your the implication of your question is, why go to multiple asset classes? Because my comfort level is in my backyard and there's not like a ton of things for sale at any given time, right?
Yeah.
And especially when I don't want to say you're a bottom feeder, but I do apply the methodology that come from single family homes. Our core
Right.
business historically there had been the fix and flip business. So you want to go into a fix and flip, identifying something that needs work, that has opportunity, that you're buying below market value, that you can improve, change the value on, and make it worth more. So the same thing for us in commercial is how can we buy a dented and scratched, and some of that times means something with a unique lease, or something that literally needs some physical improvements. Oftentimes it's some things with the expenses are out of whack. The previous owner just didn't manage it correctly. So we can come into that, understand what to do, lay out a game plan, and then allow our property manager to come in and execute the game plan.
Yeah. Yeah. Is your focus fix and flip, or is it just stabilized assets, or you don't care? As long as you're going to get your return.
Yeah, as long as we get the return, it doesn't matter to me. Meaning, yeah. So how do you get there? You either get there through a fix and flip or a tremendous buy, right? A really good buy. So it doesn't matter to me how we get there. We're under contract for one now, which is just a really good buy, which we don't need to do anything for. Sourced it off market. A motivated seller, just became a really good transaction for us. And so that lines up. Those are perfect.
Okay. I was in Grand Island, Nebraska last week, and we had been bidding on a Chipotle there.
Oh, okay.
And it looked like a great deal. Man, we got beat out. And I thought, I'm in Nebraska. I'm driving by this Chipotle all the time. I love Chipotle as a company.
Yeah.
But I'm amazed the number. Now, what's the population in your area?
The MSA, which stretches an awful long way, in my opinion, like 30 some odd miles to where you wouldn't call it part of it, because it goes up to Ames, is about 750,000. But I'm going to say, kind of Des Moines and suburbs is just about, over 500, just over 500. Yeah.
All right. So yeah, you've got a lot of fast food and
tons.
Yeah.
Well, middle America, you bet there's fast food.
Walgreens and CVS is on every corner.
Yeah. That's exactly right.
Oh yeah. Yeah.
I was amazed. And a growing population. But Des Moines continues to grow. There's a lot of positives here. I just happen to be born and raised here. So kind of won the little lottery for us here.
Yeah. It's I'm amazed at, just being in Nebraska last week, the growth in Grand Island, Nebraska, Hastings, Nebraska. Even my hometown, it's only 280 people, but the homes that are now filled with people I don't know, and but they're driving 45 minutes to work, but they're in this small town, and life is good for them there. And so there's a lot of positives to these areas.
There's tons of positives. Yeah. Well, that sprawl of, Omaha westward, and I know it's still a ways from Grand Island, but it just keeps growing west, further west and west. And Lincoln keeps growing too. You're right.
Yeah. Well, wouldn't you think our football team may be getting better with all this growth? Because
it's been tough. It's been a tough go since 98. Yeah.
Wow. It was only 98. Seemed like 40 years ago.
Yeah, I know. The question I think becomes is can anybody in that, that Big 10 or Big 12 conference, either one of them.
Yeah.
And can anybody compete with that SEC? Yeah. But I agree with you.
Yeah. It's been a tough go. And now, how are you guys financing these deals? When you made that transition, how did you put the money in place to really make this change?
Yeah. Fortunately, I, had a long career before I bought my first commercial one in the brokerage side. I had money, saved up for the first go. Well, the first one I did though, ultimately executed on a burst strategy. Right. So I went in there. I mean, I bought it with no money down. So I was able to do that. I outlaid the dollars and cents for the repairs, which was about 115,000 myself. And then I came back inside of 6 months, did the repairs, fixed it all up, had the guys fill it. And so had it 8plex, 100% full, went in, refinanced it, and pulled my money out.
Okay. Yeah. Yeah. Those bank connections, especially in these smaller communities, are critical. Yeah.
I primarily deal with local banks, and banks.
Yep.
The goal there is you got to be selective with the right banks.
Yeah.
In my opinion, you want somebody who is relationship based, not transaction based,
Mhm.
especially going into what I think we're headed into is a recession. Having connections who are focused on relationship. I mean, the transaction's got to work, but they're focused
Yeah.
on the relationship. They want to know, they want to do business with you in the good times, and they want to see you all the way through a career.
Yeah. Yeah, I agree. Well, I think that's especially being in commercial real estate, it's a relationship business too. And
Correct.
you've got to build them, and and you got to stay on top of them. Um, what do you think's going to happen, as the economy is slowing down a little bit right now,
Yeah.
right? This BR strategy, do you think that'll continue to go, or do you think people are going to transition into having to find another way to do it?
Well, on the house side, that thing's dead.
Yeah.
I
Okay.
mean,
Already is.
it already is. Yeah. I
Yeah.
mean, it only works when either comps are rising or steady and interest rates are steady or declining. And so we're at a point right now where comps on the single family side will month over month start to fall.
Mhm.
We're starting to, I mean, interest rates have gone up almost double in the last, from December, in 6 months.
Yep.
And so comps will start to fall month over month in sales prices, and interest rates are going up. They're going against you.
Yeah.
It's just not going to pencil out. On the couple that with the commercial side, because the property value is the worth of a property is derived from an income methodology, not a sales comparison approach. So
Yep.
if you can focus on driving the income and reducing expenses, therefore increasing that net operating income, the NOI, cap rates seem to be, although they're migrating a little, they're pretty steady right now. I think you still have a window of opportunity to execute that on a commercial property.
Yeah. Yeah, I agree. I think that strategy. I was talking to a guy that owned a bunch of them, and he hadn't flipped out of them yet. I'm like, man, I wouldn't be holding on much longer. It's been like 2 months ago, and I haven't reached back out to him, but I wouldn't want to be sitting on those. I think it's a great time to be getting them flipped and getting them out and your money back into the bank.
I couldn't agree more.
Now, did you guys ever do any Airbnb properties around Iowa?
No, we never have. And it's a tremendous model. A whole bunch of people execute on it. We have never once done it.
Yeah.
We keep giving it thought. I every time we go into the new year, I'm just like, we should try one. And then I'm thinking, you know what, that sounds like a whole bunch more work. Maybe we should just buy more commercial.
Yeah. Yeah, I know.
Yeah.
And do you think that's doing the Airbnb method? Do you think that's sustainable in a slowing economy?
That's a good question. If people pull back, I think that depends on your Airbnb. For example, if your Airbnb is, you cater to a vacation type crowd, and we go into destination, we go into a recession and that thing pulls that, travel pulls back. I think you're in a tough spot. Or, think about if you cater to a crowd who's close to a hospital, for example.
Mhm.
There's tons of traveling nurses right now. There's a whole bunch of people who come into a hospital, see family and friends and everything associated with that. That may be a different play.
Yeah. Yeah. You got to really come to a strategy. I think, and we tell this to our agents out here, Neil, is, the last 11 years in real estate, it's been,
Yes.
and, it's a lot in Wall Street too, we got away from a lot of the fundamentals, right?
Correct.
And if you want to succeed in real estate going forward, you better be working your fundamentals. And they're starting to realize how critical that is, because businesses are evolving, they're changing to the times. And, I think we're going to see some retail that's going to have a little bit of issues. We're starting to see some of it already around the country.
Yep.
But I just think if you focus on the fundamentals, you get your structure in place. It's in commercial real estate. It's always a good time if you really continue down the right path.
I couldn't agree with you more. I think if you're buying correctly with the correct underlying fundamentals, you put sound debt on the property, anytime's a good time.
Yeah.
And we would execute that, and no matter what's transpiring.
Yeah. And building the relationships, continue building the relationships. But all right, Neil, well, let's tell us a little bit about your podcast and your book.
Yeah, my podcast, Real Grit. We talk about the ups and downs, the bumps and bruises along the way. And so in a multitude of people, from commercial real estate, single family, I mean, everything in between. And so we just talk through that, how people get through it and their personal story and really how were they able to make it through it.
All right. Very good. And your book?
Yeah. My book, Unicorn Hunting for Real Estate Investment Companies, it is ultimately becomes your complete hiring funnel. So if you're looking to hire in the post-COVID age, that's really what this is about. 80+% of this can be done by a VA. So it's an SOP on steroids, if you will, because it'll show you step by step exactly what to do, how to do it, and how to flood your pool of applicants to get them qualified and hire your unicorn.
You know what, Neil, if you send me those links, I'll put both of them down below in this video so everybody can find them and find you and buy your book and log into your podcast. And thank you for taking the time for coming on today. And let's say a little prayer for the Huskers while we're all here. And how's Iowa doing, actually? The Hawkeyes are still holding strong?
Hawkeyes are holding strong. Yeah, I think we've got the longest coach almost in history. I don't think he may have gone in 98. That's how long he's been there. So
oh, wow.
He's got a tremendous tenure here. And it would be wonderful to see any of us in the Big 10 or the Big 12 get really, really battle it out and get to the final. I think that would inspire everyone else in the conference to go, oh, we really can beat somebody in the SEC. So it would be great. Hey, Joe, let me mention one more thing. I'd love to give something away to your audience. Okay. I wrote a little cheat sheet here, uncovering off-market commercial deals, the who, the where, the how. And I'd be happy to give this away to folks if they want to check it out.
Okay.
It just really is a how to find your first deal, how to source it off market. Cause I think that's where, and I know this is true. I know that's where the absolute best deals come from, when you can source these things off market. So you can check that out on my website, legacyimpactpartners.com/gift, GIFT. And I'll make sure I get you the link so you can drop it below.
Yeah, send me the link to the book, the podcast, and that. We'll get it on. And thank you very much, Neil. And have a great weekend.
Enjoying talking to you. Thanks, Joe.
Take care.